Good morning, trading world. It is June 16th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Now, with the Fed speak out of the way and a little bit of relief for the shorts, it's time to find that temporary tradable bottom that I was speaking about yesterday. It won't be clear because of so much short interest in the market, so undoubtedly there will be a big gamma squeeze to kick things off. Friday we had one of the biggest triple witchings ever. This is a day where a daily expiration, weekly and quarterly expiration meet, and all of those positions have to be either closed or rolled. There are trillions upon trillions of dollars that are going to be moved Friday. I can't think of a better crescendo for a gamma squeeze. So based on where my projected range was, let's bring back the vol box to help us position ourselves. The projected range is between 384 down to 361. That's about a 23-point range. Take that 23-point range and divide it into thirds. That gives us a middle zone of between 376 and 368 to stay out of. Remember, taking positions in here is like trying to cross a straightaway on a highway. No one wants to dodge cars at 70 miles an hour. Remember, it's always better to get here. This is more akin to being at an intersection or crosswalk where cars should slow down. It's not always, they don't always do it, but this is the most likely spot where they will slow down so that you can cross safely. So now we have a probable zone to get short in from 384 to 376, and if price breaks above 384, get out of your shorts. The probable zone to get long in is going to be 368 down to 361, and if price breaks 361, get out. No need to take on any extra risk below 361. The time frame that is in control right now is the monthly. But if we wait for the stochastic or RSI on this chart to give confirmation, you'll miss damn near all of the move. So we look for the 4 hour to give us confirmation. The difference on confirmation is like waiting on a tanker ship to make a U-turn, and that's the monthly chart, compared to a tugboat making that same U-turn, which is our 4 hour chart. Alright, let me bring up the key levels for the day. Alright, here we have our levels of the day starting on the resistance side. We have our jack resistance from 373 to the 374 area. Then we have queen resistance 375 to the 377 area. And then we have king resistance at 376 to the 380 area. On the support side, we have jack support at 369 to the 368 area. Then we have queen support at 367 to the 365 area. And then our king support at 364 to the 361 area. I believe we're setting up for, like I said, a big short squeeze that's going to lead us into a huge bear market rally. I don't look for it to start today, but I do look for the squeeze to actually start, or actually we're already in the squeeze from yesterday. So the height of yesterday is basically the top of the squeeze point. Once we break through that, get a good ways and close outside of that, we should be on our way. But until then, I look for us to come back and visit the lows, and if not, push an actual lower low than that 370 that we hit a couple days ago. And that should give us our divergence and clear us for takeoff on the bear market rally once we get that divergence in play. All right, the main thesis for today is bearish, closing below the 379.20 with a projected target low between 369 and 363. Our alternate thesis is bullish, closing above the 379.20 with a projected high between 376 and 380. We appear to still have good shorts left on this side of the short squeeze. So if we get to the top of the vol box today, still looks good to take that short here. The longs, if we get back to the bottom, I still think we have some stretching that we'll kind of reach back down and kind of hit some new lows, maybe overnight, tonight, or Friday morning. So be aware of that. The current channel we're in is 364 to 379. The next major channel is 364 down to 353. So if we break below that 364, keep that in mind that we shouldn't go, or maybe 353 may be the point where we're headed towards. The next channel above is 379 up to 397. All right, that brings us to the scenarios of the day. All right, our first scenario and most probable scenario is our expanded range day structure. We can look to chop between recent or overnight highs and lows for a majority of the day. And remember, when I say expanded range day, it means we're going to push a boundary. So look for us to set a high boundary around the queen or king resistance area, and then we're going to at some point push one of those boundaries, whether it's the high boundary, whether it's that queen resistance level, we're going to push toward the king, or we're going to come back, and this may not happen until overnight, but we're going to push that lower boundary of that 369. And that is most likely to happen after hours. So that's our expanded range day structure. Alright, scenario 2 is our trend day down. We open gap down and start with a rally back toward the previous close represented by the blue line. We find resistance on or before the previous close, then begin our downtrend for the morning, our golden window right here. This is the best time to trade, catching that hit off resistance and holding it till about somewhere before or around lunchtime, till we get that lunchtime chop. And lunchtime chop is either going to be possibly around the queen or king support area, and it's possible that we've seen most of the downtrend in the overnight session, so we're just going to kind of bounce back down to where lows were overnight, somewhere around there, but it's possible to push that. So that's our trend day down scenario number 2. All right, here we have our last scenario, which is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support area before spending the same energy we used going down to come back up the second half of the day. The closer we get to closing, there's a strong vice versa warning on this, so that we could actually end up looking like this, where we get a continued push higher toward the jack or queen resistance level, and then find our midday chop either between that queen or king resistance area and then using the same force that we went up with in the morning, we come back down the second half of the day. This is starting to be the more prevalent scenario for our rounded reversal day type structure as we get closer to the opening. So that's it. Those are the things to keep in mind today. Remember, it appears that we're going to or starting to enter into a short gamma squeeze. Let me get this off and just remind you of where we are. I'm going to take us back out to 4-hour chart, and as you can see, this is the Andrews pitchfork that I've been used to keep track of the trend channel that we are in, and we're not far from the bottom of that channel. So I would not be surprised if between now and Friday we reach out and test the bottom of this channel, and that puts us at 361. So that's where we are. We've come from all the way near the top of the channel, across the middle, and here we are within arm's length of being able to test the bottom of that channel. Wouldn't be surprised if we get a break outside of that channel to begin, or at some point in this gamma squeeze that we're getting ready to go through. So that's it. I hope this helps. As always, please know your risk. Remember, with using the vol box, it helps us with our risk. Because if we take a position inside this lower third, this is all you need to risk. Going out or breaking outside of the bottom of this box, that should be where your risks are capped. Anytime you see that break, get out of the position, or unless you use a spread or something to that effect, your risk should be capped at that point. Same for the top end. Your risk, if you're taking a short at the top part of the vol box, this should cap your risk. I hope this helps. As always, wishing you a positive trading day. Have a great one.